All right, my friends, so the new month is officially upon us, which means that it's time for another dividend portfolio update. And this one's going to be really exciting because this last month was my best month in the portfolio so far this year. Across the board, there was just really strong performance. And we're going to get into all of that in this video. I'm going to show you everything, like my best and worst performing stocks for the month, all of my recent moves in the portfolio, and we'll discuss what my upcoming plans are here in August. But before we get to that, guys, I want to hear from you. Leave me a comment below and let me know what's been going on in your portfolio this last month. Were you up? Were you down? Did you hit any crazy milestones in your portfolio? I want to hear all about it in the comments below. Anyway, getting into how my portfolio performed this last month over here on my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download this spreadsheet in the description of the video. But anyway, starting with my main taxable brokerage account, we can see it's currently valued at $62,613.69. And looking at the dividend income breakdown, the projected annual income in this account is $2,553.84, which breaks down to almost $213 every single month, nearly $50 every single week, and exactly $7 every single day. So just from dividends every day, guys, I could get my coffee and croissant from Starbucks if I wanted to. But going back to the portfolio value, this means that we're up a few grand just in the last 30 days, which is one of the biggest jumps that I've seen in a long time. And it's definitely the biggest jump in portfolio value that I've seen so far this year. And if we look at the breakdown of returns using Snowball Analytics, which is another portfolio tracker that I've been using a lot lately. And if you saw my last video, you'll have heard me talk a bit more in depth about Snowball Analytics. But if not, guys, this platform is a beast. And if you're not a spreadsheet person, I know some people aren't, but if you're not a spreadsheet person, or if you're looking for something with more bells and whistles than your standard spreadsheet, then I think this is a really great portfolio tracker to consider, or at least try out, and you can actually do so for free. In the description, there is a link to try out Snowball Analytics with a 14-day trial, so I highly recommend you guys do so. Once again, check out that link in the description for a 14-day free trial. But anyway, getting back to it and looking at the breakdown of returns for the month, guys, all in all, my rate of return was just over 6% for the month of July, and we can see in total the gain was about $3,600, about $3,300 of which came from share price appreciation. So really solid month in terms of share price gains. And then throughout the month of July, I also received about $224 in dividend income, with some of my largest payments coming from, first and foremost, Altria Group right here. This was my largest payment in July. They paid me just over $55 for the month. And then also Blue Owl Capital Corporation paid me a really nice dividend, just over $43. And I also had a few other really solid ones, like WP Carey paid $33, KRC paid $41.58. And if you want to see the full breakdown of all my dividend payments from this last month, and check out the video I have linked in the pinned comment, guys. It was a record month of dividend income for me. This was the first time that in total I brought in over $300 for the month. But once again, if you want to see all that, check out the video I have linked in the pinned comment. I go through it all there. But now comparing my portfolio's returns to some of the major indices as well as SCHD, as we can see, I outperformed everything in the month of July. I beat the S&P by about 5.7%. I outperformed the NASDAQ by over 9% just this last month. That's a pretty solid difference there. And then I just barely outperformed SCHD to the tune of about 0.1%. So really nothing too crazy there. And then if we zoom out looking at this on a year-to-date basis, it tells a bit of a different story. I'm still underperforming the S&P and the NASDAQ, not by much though. The S&P is only beating me by 2.5%. The NASDAQ's only beating me by 0.25% basically. And I am still outperforming SCHD by a couple percentage points right here. So overall, I think this is pretty solid. And then if we zoom out once more, looking at this over the last 365 days, it's pretty similar. I am still underperforming the S&P by 2.4%. The NASDAQ's got a bit more of an edge against me. It's beating me by 3.4%. And then I'm beating SCHD by a bit more in the last 365 days by about 3.8%. But overall, guys, I would say that it was a really solid month, and a couple of my stocks this last month actually saw double-digit gains, which is what we're going to be taking a look at next. All right, guys, now looking at my best performing stocks for the month, right there at the top was Vici Properties, who saw a really nice 13% gain just in the last 30 days, which I think mostly came from some more indications that we might actually see rate cuts happen in the near future. And as we'll see in just a moment, all of my best performing stocks from this last month were REITs, and they all jumped as a result of this. But sticking to Vici for just another moment, year to date, we can see that this company is still in the red. In 2024, they're still down 1.1%. And as you guys know, Vici is the latest latest addition to my portfolio. I actually only started buying this stock 1 month ago, actually exactly to the day as I'm recording this. So I've only been a beneficiary of the strong performance this last month. And if we look at my Vici position, we can see I have 105 shares of this company at a really nice average cost per share of $27.90. So right now the current share price is about $4 above that, which if we scroll over is going to leave me with a near 13% return just in the last 30 days. That's pretty crazy. But anyway, moving on to my second best performing stock for the month. Like I said, they're all going to be REITs, and this one is Realty Income, who saw another double-digit gain in the last 30 days. They're up 12.12%, but if we zoom out looking at the year-to-date performance, it's not as nice. They're still in the green, we'll take it, but they're only up about 1% for the year. And now moving on to my third best performing stock for the month, this one was KRC, who saw a gain of about 7.5% in the last 30 days, which is very nice. It would have been higher if not for today. KRC is down about 4%, 4.1% as I'm recording this. And if we zoom out looking at the year-to-date performance, the stock is still down over 15%. So out of all the REITs that we've seen so far, they're seeing the biggest decline. At any rate, as far as the last month goes, all three of these stocks still did really well for me. And now, on the other hand, in terms of poor performing stocks, the only one that was down in my portfolio this last month actually was Starbucks, and it really wasn't that bad. I mean, they weren't even down 0.5%. We can see that after they reported their quarterly earnings right here, the share price saw an initial pop, and the earnings overall were better than I was expecting, but I will say the numbers coming out of China did look pretty rough. They saw comparable same-store sales decline in the mid-teens, which I think was the worst news to come out of the call. But looking at the year-to-date performance, Starbucks is hands down my worst performing stock so far this year. They're down 20.6% in 2024, so that stung a little bit, but it's been a really good buying opportunity, and I have been loading the boat on Starbucks lately, guys, as we'll see in just a moment coming up next. All right, guys, now getting into all of my buys and sells for the month, I actually did sell out of a few positions in July. I sold out of 3 different stocks. Apple, Coca-Cola, and Southern Company all were sold on July 2nd. And fortunately, I was able to see some gains on all of these. With Apple, my cost upon selling was $129.45. I ended up selling at $219 per share. Coca-Cola, my average cost was about $51.50, and I sold for just over $63 per share. And then Southern Company, my average cost was almost exactly $60, and I ended up selling at about $77.50 per share, although all 3 of these have had a little bit more of a run up since I did sell them. But nonetheless, guys, we locked in some pretty solid gains. With Apple, the total return was 70.3%. With Coca-Cola, the total return was 34.5%. And with Southern Company, the total return was 43.7%. So across the board, we did pretty well with these. And now getting into all of my buys, it was a really solid month of buying. I mean, starting at the top there with Johnson & Johnson, I ended up buying about 0.8 shares of J&J at an average cost of $145.79, and it's seen a bit of a run up since then, so I was happy to buy a little bit then. But moving on, like I said, I loaded the boat with Starbucks, guys. Just in the last month, I added 12.25 shares of this company at an average cost of $77.42. And if we look at my position, we can see that I am quickly approaching 100 shares of Starbucks. Right now, I have just over 78 shares at an average cost of $86.34. And comparing that to the current share price, there's still about a $10 spread between these two numbers. So I'm still seeing a decent loss with Starbucks. It looks like just in terms of share price, I'm down nearly 12% on a total return basis, including dividends. I am seeing a bit less of a loss, 8.3%. And with all of these buys, guys, Starbucks has officially become the largest position in my portfolio, currently making up 9.47% of the total weighting, which is exactly the same amount as Johnson & Johnson. So these two are going to be neck and neck right now. But anyway, in the month of July, I also added quite a bit to Visa. From selling out of Apple, I redeployed all of those funds back into Visa, and I was able to buy almost 5.5 shares at an average cost of $264.14. And this is going to leave me with now 20.4 shares of Visa at an average cost of $270.13. So the current share price is a few dollars below my cost basis, which means I'm seeing a little bit of a loss. Nothing too crazy in either department, the share price returns or the total returns. And I still want to make Visa the largest individual stock position into my portfolio. And it looks like at this point I have about 0.8% to go before it gets there. I wanted to catch up to where Starbucks and Johnson & Johnson is, and it was there, but I've been buying, so much Starbucks lately. Johnson & Johnson, I've been buying a bit too, but Johnson & Johnson saw a pretty nice run up in the last month, like a lot of stocks did in my portfolio. So that's going to bump up the weighting of it. And so I need to get back to buying some more Visa. Maybe I'll work on that here in August. But anyway, as we've already talked about, the last individual company I added to was Vici Properties, which, like I said, was a new position. We already looked at my position, but just as a recap, guys, in total, these purchases throughout the last month bring me to 105 shares at an average cost of $27.90. And those were all of the individual stocks that I added to, but we still have the ETFs, guys, in the Roth IRA. First and foremost, I added about 4 shares to my SCHD position at an average cost of $77.89. And this is now going to leave me with 84.5 shares of the holy grail of dividend ETFs. And as I tell you guys every month, my goal with SCHD is to hit 100 shares by the end of 2024. And it's no question, we're going to get there. And in fact, at this rate, we might even see 105 or 110 shares of SCHD by the end of the year. We'll have to see what happens, but there is no doubt in my mind whatsoever that we will hit at least 100 shares, which is awesome. And then last but not least, I also added to VU in July. Nothing crazy there. I picked up 3/4 of a share at an average cost of $510.40. And with all of these purchases, guys, July ended up being a really nice shopping spree. And overall, I'm really happy with these moves. And with that, now moving on and taking a closer look at my Roth IRA over here on M1 Finance, my Margarita Money portfolio. At this point in time, it's currently valued at $11,314.08. And looking at the returns in the last month, this portfolio saw a little bit of green. It was up almost 1% in the last 30 days. If we zoom out looking at the year-to-date performance, it's a lot better. It's up 9.34%. And if we zoom out once more over the last year, guys, this portfolio is up a whopping 16%. So across all time periods, the Roth IRA is doing pretty good. But anyway, now if we take my main taxable brokerage account that's valued at about $62,600 and is bringing in $2,553 of annual dividend income, and add that to my Roth IRA that's at $11,300 and is now officially generating $300 of annual dividend income, this is going to bring the total combined portfolio value to $73,927 with a projected annual income of $2,853, which is a huge jump compared to this time last month. Going into July, the projected annual income was $2,719, which represents a gain of $134 just in the last month. And this big jump pretty much just came from selling out of Coca-Cola and Southern Company and reinvesting all of that into Vici properties. There's quite a big difference between Vici's yield and the yield of those two other stocks. So that definitely added a nice boost to my projected annual income. And then looking at the year-to-date income game, just here in 2024, I've added $380 to my projected annual income. We started off the year at $2,473, so we've seen quite a big jump in a short amount of time, if I do say so myself. Now guys, as far as my watch list goes, we're taking a look at the companies that I might want to buy. These are all of the ones that I'm kind of keeping in the back of my mind, keeping my eye on. These are the ones that seem kind of interesting to me. But anyway, I added a few different companies to this list in the last month. First and foremost, I added Cintas here, which is a company that does a handful of different things. But one of them is making uniforms and work apparel for companies in all types of industries. But the financials look really strong with Cintas, so I wanted to dive a bit deeper into the company. And then moving on, I also added Pool Corporation, ticker symbol Pool, to this list, which is the world's leading distributor of pool supplies and equipment. And the financials for this company also look really good, so I want to learn more about it. And then last but not least, I also added Republic Services, RSG, to this list, which, like Waste Management, is a waste management company. And actually, here in Vegas where I live, Republic Services handles all of the waste management. So I see their trucks all of the time. And in general, I just think this type of business is extremely resilient. And I think it could be a good fit for my portfolio, but we'll see what happens. And speaking of good fits, guys, the 3 stocks that I'm telling you about in this next video right over here are the perfect fits for my portfolio. These are my top 3 holy grail dividend stocks. So click right over here to check them out, and I'll see you in the next one.